Hey traders, John Howell here. Welcome to another update of officialjohnhowell.com market update, or in this case, in this video, I'm going to be giving you an awesome trading tip and a trading technique to help you stack the odds on your side even more when you're looking to place the trade. So let's get into it. Alright, so let's get into this update. Anything I do say in this video, obviously you need more than just this technique to trade, and especially you need good trade management, you need to have good emotional management, and you need to make sure that you are trading with a very small amount of money of your account. That way, if something does go wrong, that you only hurt just a very small, we're talking 1%, 2% of your account. Makes sense? And if the bottom line is that if you're not 100% happy with the worst case scenario of that particular trade, then don't trade. Simple as that, okay? Anyway, what I want to talk about this tip here is using moving averages to gauge when we're in a trend or not. See, if you're trying to trade a situation when the market's going sideways. So for example, I'm looking at Google here, for example, okay? And at this particular time in Google, you can actually see what's happening. I've got a couple of moving averages. I've actually got a few. To 200, I've got 200, 200, 52, 20, and a 5, okay? So when we're looking at the moving averages itself, don't worry about the 5 moving average. Actually, in fact, let me just do this here, just for this purposes. We're going to look at the 3 stocks here, three moving averages here, okay? Whenever we get the 3 moving averages come close together, that just shows that the market's going sideways. Makes sense? So if the market's going sideways, then you really don't want to be doing anything with that. Makes sense? So as we can see here, right, is that it's using moving averages can help us gauge whether the market is in a trend or not. And remember, we actually want to, if we're trading the markets, especially for short-term trading, I mean 1 to 3, sometimes for a couple of week trading. I'm generally between 1 as little as that, sometimes up to as as low as as low as 1 day, up to a couple of days, maybe a couple of weeks. Make sense? 1 to 5 days is generally what I'm in there for myself. So for me personally, is that what I'm looking for is that I'm actually looking for a market that's trending. All right, you don't want to be getting in the market that's gone sideways. You want to wait for the market to move, and then you want to jump on. Makes sense? So as you can see by looking at Google on this chart here, you can see, especially right now, we are in a sideways movement, all right? And you can see the moving averages are very close together, okay? They're very, very, very tight together. And what that's saying is, remember, the moving average is just the average of what's been happening over a certain amount of period, depending on what the period is. So that's an average, right? And so as you can see, right, when the moving averages come close together, it means the market's going sideways. Now, it doesn't mean the market's not going to go up or go down, right? It's eventually going to break out of that. But where you just don't know, right? Right now, it looks like it's going to go up, and maybe a week later, it might do this. You know, you just don't know. You know what I mean? So with this chart reading technique, it's about using the moving averages to gauge whether we're in a trend or not, and then try to use that as your trending, as your decisions whether to go long or short. Make sense? So if I bring up this area through here where we are right now, okay, is using this tool here that I've just given you, using this tip here that I give you, you can see here, right, that we're not sideways. You can see the 52 is pointing down, the 20 is pointing down. There's a gap between here. So therefore, right, what is the most high probability, right, is looking for shorts. So what you'll be looking for is you'll be looking for pullbacks, and then you'll be looking for a short on a pullback, short on a pullback, short on a pullback. Same when the market runs up, right? Look at this here. The 20 is rising up, the 52 is rising up. There's a bit of a gap between them. You can see the trends in place. So you'll be looking for the pullback, right? Market runs up, you'll be looking for a pullback. Buying on pullbacks when the market's trending like this is good. But what happened here, right? The market went back down, went back above. That was a pullback there as well too. But as you can see, right, look at the moving averages go very tight, and see where it just went sideways, right? So as it went sideways through here, look what happened. What happened through here is that wasn't actually a really good trading time, right? Because the market really didn't move much to give you a good trade. Maybe a little bit of trade there, but you're not really waiting for a trend, right? Then what happens? The market breaks down. The 52 breaks down again. The 20 breaks down. As you can see here, right? Wait for a pullback. You see here, and wait for a pullback through here, right? And as you can see, when I bring this market through here, you can see that little pullback there was a really nice pullback, and the market just ran down through there. Okay. So anyway, guys, that's anyway, traders, that's the tip for today. Use moving averages to help you gauge where the trend is. It's seriously going to help you when identifying, should I be looking for a long signal on this stock or looking for a short signal, especially if you're a 1 to 5 day or 1 to at least a couple of week trader like me. And remember, you can actually apply this to any time frame. If you're trading a 5-minute chart, an hourly chart, or with me, I like to trade the daily charts. Plus, also I like to trade the other time frames as well too. But this is really going to help you when trading that, okay? But remember, don't just trade based on, the moving average is going down, I'm waiting for a pullback, and then I'm going to get in. No, use your stochastics, use your support and resistance levels, use a really good entry bar to get in on. Look at your volume, all that sort of stuff. Makes sense? And so that's really going to help you. Anyway, guys, this is the trading technique for today. Look at moving averages to gauge what you want to do. If you want to learn more information like this, then click on this image up the top here. It's going to take you over to a page where you can get a whole brand new course for free to help you. 12 videos, 12 hours long, helping you move ahead in the markets. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.